Hey, what is up everyone? The past couple weeks and months has been really turbulent. ASX 300 is currently down approximately 3% over the last month. Nasdaq 100 is down approximately 4% over the last month. And if you're really into high-flying growth stocks, that correction is probably going to be in the double digits. And also for S&P 500, it's a similar story. And instead of blaming everything to be the new variant, I am more of a believer that the market is reacting to the Federal Reserve potentially talking about ending the tapering sooner so that they have the optionality to raise interest rates to deal with inflation. So this sell-off is almost a anticipation of that happening. Whether that happens or not, we will have to wait to see in the next FOMC meeting, which I believe will happen soon. So in this video, I want to talk about what I'm expecting from the markets in the near future, what I personally do when things are really turbulent, and what I've been adding to my portfolio during this sell-off. So as usual, no, this video is not financial advice or recommendation to do anything. If you do learn something new, it would mean the world to me if you could gently smash the like button somewhere around there. So without further ado, let's go. Before I talk about what I'm expecting from the markets in the near term, I just want to keep you posted on the career progression content. I've locked in a few guests that I personally look up to. They are amazing people, and one of them is an ex-professional poker player. That conversation is going to be super interesting. I'll keep you posted. So the graph in front of you is a collection of US software companies broken into three main segments. You have high growth, mid growth, and low growth. And each of the charts represents the forward revenue multiple of these companies. Now, there has been a contraction from 35 times to 26 times recently in the high growth segment. And this is probably a representation of the market anticipating the Federal Reserve to confirm they will end tapering sooner rather than later. Now, if they do confirm from the FOMC meeting, then we'll probably see a little bit more bleeding. But when they do decide to hike interest rates in the future to tame inflation, then there's probably going to be a further multiple contraction down to the 15 to 20 times range right here. So what this means for individual companies is that companies with a really rich valuation, like for example, Cloudflare, who's currently trading at approximately 65 times revenue, will probably need to come back down to earth a little bit. So this is a good time to build your shopping list in terms of what you want to own more of, what you want to own less of, just in case that if the market do present those opportunity, we can pounce on those. So when things are really turbulent and I'm experiencing a market sell-off, these are the three things I focus on. And the first thing is I always double check the thinking on my companies. I just want to know if there's anything that I am not willing to sit through a drawdown on. If there are, then I'll decide whether I am going to sell it to raise some cash or sell it to reallocate that capital into a higher conviction play. The thing you need to remember is that the value of the asset will grow over time. Granted, you've done your research, but the price of the asset will go up, down through market cycles. So for me, I just need to know whether I'm on the right boat and this asset is indeed going to grow in value over time, right? So that's why I do this on a pretty regular basis. The second thing I focus on is my ability to generate income. Because when the market presents you with an opportunity, you need to have the liquidity to capitalize on it. So for me, there's not really a point to always focus on what is happening in my portfolio. It's more important to me in my current stage of life to focus on the amount of income I can generate because I can invest more, knowing that if I've done my homework right, the asset value will grow over time. And the third thing is that I will continue to invest no matter the times are good or bad. For those of you who have been following me for a while, you will know that when times are bad, I will probably invest more than when times are good. This is a good time to do a portfolio update. My CMC market portfolio side of things is worth 125,000 Australian dollars. And I have added more to my Roku position. So currently it should be worth 6.4K. So then in my next video, that number will probably change. And the main reason for adding to Roku is that they're currently trading at 7.5 times EV revenue, and they traditionally trade at 10.5 times. So for me, given that I've done my homework and I understand what the company is about, at a 7.5 times revenue, I just felt like that was enough margin of safety for me to add a little bit more into Roku. There's probably a little bit more bleeding to do after the FOMC meeting, so we'll see. The other thing I want to point out is that Novonix went from $12 to $8. And when we look at the valuation of Novonix at the peak of like say $12 per share, Novonix was trading at a 600 times EV revenue. So at a 600 times EV revenue, it's not sustainable for that to keep going. So a contraction was inevitable. And even at a 400 times EV revenue, is still speculative in my opinion. So I do think that people who haven't done their homework will probably paper hand and offload the shares. So I'm personally mentally preparing for another sell-off. But for my portfolio reasons, I'm not going to touch it. Not going to do anything. I'm just going to let it play out. I'm just anticipating another sell-off. For my stake portfolio is currently at 55,000 USD with 1K in cash. So give or take, it'll be worth approximately 65,000 Australian dollars. Now I have added a teeny bit to my Twilio position because it was getting more attractive and I wanted to add more to it. But I wasn't sure how much I should add because when I look at the Twilio valuation, they're currently trading at approximately 11 times and generally they trade at a 12 times revenue. So at 11 times, it's approximately in the pre-pandemic revenue multiple. So that's why I felt comfortable adding a little bit more. At the same time, I just want to say that fundamentally speaking, I am very attuned to the Twilio story, but I do think that there'll probably be a little bit more bleeding moving forward before we can actually go up higher. Now, Disney, no change. Regeneron, no change. I think the only other thing I wanted to mention is that for a company like Snowflake, which has a really high valuation, the reason why I don't plan to buy the dip for these kind of companies is because the multiples are huge. And I don't really know how the market will treat this company. But the only reason why I have it is because when we look at the net expansion for Snowflake, you can see that they have 173% net expansion, which means that for every dollar a customer is spending last year, they're spending $1.73 this year. I don't think that's going to slow down anytime soon, but the valuation is really rich. So that's why I haven't decided to add any more to Snowflake. If you survived all the way to the end, thank you. You are the real MVP. And if you did learn something new, it would mean the world to me if you could gently smash the like button somewhere around there, subscribe to my channel so that when I release future content, you'll be the first one to know. As always, Otto will always do the honors and I'm gonna see you very soon.